Okay, so emotional trading. It's one of the worst things you can do when you're trading. It's akin to gambling, and I've had one of those weeks where it'd be quite easy to give into the emotions. So I've been trading the London Breakout for the last week, and London Breakout is basically you can use it on the pound US or use it on something like the FTSE, and basically you're trading on the breakout of a particular range. The particular range in this instance, for example, is the Asian range. Now I've got the chart here of the pound US. Ignore the fact that it says weekend pound US because this is live at the moment. I'm recording this at the weekend, but no need to worry about that. But what I've got here at the moment is Monday the 15th of April, and the greyed out box there is the Asian range. So many variations of the London Breakout, but this is the pound US and this is the Asian range blocked out here on a 5-minute chart. Okay, so it's from midnight to 8 o'clock in the morning London time. I'm based in London, from when the London market then opens. Okay, so normally the Asian range is quite narrow because there's not much trading going on with the pound US. They trade more the Australian dollar, New Zealand dollar out in the Asian session rather than the pound US. So it stays within a range, and what you're looking to do is obviously to trade the breakout. So I wait for a breakout either side of this grey box. The grey box is the range, the high and low of the Asian session. So here it starts to break out here. I'm waiting for a clear candlestick, and what I would do is I'm looking for 1.5 return. So for example, if I was betting £10 a point, then, or £10 a pip, for example, then it would be, for example, I'm looking at 15 pips, and I will put my stop at 10 pips. So I'm risking, for example, if it was £10 a point, I'm risking 100 to get £150. Okay, and as you can see, I would set the trade here. Don't worry about this blue line. This is for a further trade down the road. But this here, I would trade it approximately on this bar here. And as you can see, it goes up here, and I'll get my 15 pips. Okay. Now that was my winning trade. So that was a good start to the week. But then we come on to Tuesday, and here we've got the greyed out box. It's quite a wide range in the Asian session on Tuesday. So this is the high up here, where it started just after midnight, and then we go all the way down here. Box hasn't quite covered it, but the lows there. Okay, and if we look at what's happened here, so I'm waiting for a clear candlestick, not just the wick, but a clear candlestick. So I would open the trade there. That's approximately 450.6. Remember, I've got a 10 pip stop, and that's gone down to 12 pips, so I would have been stopped out there. But 450, as you can see, it's gone all the way up to 60, 70, about 70 pips up there. So if I'd set my stop a little bit wider, for example 15, so if I was doing 15 pips to gain 15 pips 1-to-1, then I would have actually won that trade. But I like to obviously set my limit to take my profit obviously higher than what my potential loss is, because you're going to get more losses than wins, and you will need your wins to cover your losses. So that was very frustrating. My emotions were certainly high during that one. And then we come on to Wednesday, which I think is why I've drawn these lines here, because Wednesday it's very difficult to draw a box around. The range was so wide. Okay, so we get on to Wednesday. Here we are, Wednesday, and this is, so we're looking at 12 in the morning here. You see the bottom of the range is there, and the top of the range is all the way up here. So very big range on the Wednesday, which I don't like, because I like a more condensed range. It tends to be easier to get profits that way, to get a winning trade. So going by the system, and this is where you can't let emotions get in your way, going by the system, I would have had to set it up here at 12,480, trade the breakout, go long, and obviously as you can see it's come all the way down, so I would have been stopped out. And in fact it came down almost to the bottom of the range, it's gone back up, hasn't done anything for the rest of the day. Okay, then Thursday is where technically I didn't have a range. Sorry, I didn't have a trade because of the range here. It didn't move that back. It didn't technically break the range. So we're looking at to go out this grey box, the Asian range, and as you see, it's come, because it's such a wide range on this one. Was it 12,447, all the way up to, let's bring that down, 12,447, 12,485. So it's about 40 points or 3 pips, so that's quite a big range. As you can see, it didn't break the range here, but it did break the range eventually. I think it's about 2:45 in the afternoon. But then even when it did break the range, I would have been stopped out because it's gone back up again. But I wouldn't normally, to be honest, trade the breakout after about 11 o'clock because it is what it says, it's a breakout. And normally if you're going to get a winning trade, the breakout would happen earlier on. But as you can see, it has gone all the way down, but you'd have to wait right to the end of the day. And even then, I don't think if you took it there, 12.41, you're waiting right to the end of the day. So yeah, you're still not getting the pips in. And then that leads to Friday. And Friday was the most frustrating day of all the days. Because literally what happened was, if you look at my records here, I opened at 12.441.2. And so I went long, but if you look to see where I went long, I'm waiting for a clear candlestick break. So if you get a long wick like this, I would wait for it to come back down again. And as you see, it did come back down here on this red one, came back down again. And then here we've got a shorter wick. So then that's when I took the trade, and it was 12.441.2. And you'll never believe what happened. It went up to, I think it was right up to here. And that was what, 10:30 in the morning, and it went up then. Let me just check on this. I think it went to, so it went to 12.456, 12.441.2. To get my full 15 pips, it'd need to go to 12.456.2. So I've missed out by 0.2, and then obviously it's come all the way back down again. So I would have been stopped at anyway, and then it's gone back up again to here. So you can imagine how frustrated I was. Maybe if I'd been looking at the trade and seen it just before the 0.2, I would have, well, see, if you're sticking to the system, and this is basically a mechanical system, you stick by the rules, then you mustn't let your emotions get involved. And okay, I would have, I wouldn't have had a loss. I would have had a winning trade, and I would have, it wouldn't have been quite my maximum winning trade. It wouldn't have been quite 1.5, but it would have been near enough. But then I'd be messing with the system, wouldn't I? I'm not adhering to the mechanical system, let my emotions get involved. And okay, in this case, it turned out correct. But in the future, say, just because of that 0.2, say if it had gone on and it had, had actually made the full winning trade, and this is where your emotions get involved. I mean, my emotions were really, obviously you can understand, I was very frustrated to miss out on that, just on that 0.2. And then you've got all these thoughts going in your head. You're thinking, oh, the market's against me, it's just not fair. The market's got it in for me, which of course, the market's such a huge place, of course it hasn't. These things happen. But this is this sort of London breakout, when you're operating a 5-minute chart, you can't be looking at it all the time, because then your emotions will get involved, and you'll keep changing your stops, and you move your stops down. And the worst thing you can do is obviously move your stops down to make them longer and longer to allow for the gap, for the movement. But then say that eventually, how far do you move your stop down until you get into you go from 10 to 15 to 20 to 25 pips, and then if it never rebounds, then you're making even more losses. So out of this week, I only had one winning trade. One trade I couldn't do, it didn't operate. So I had 4 trades this week, Monday to Friday, and obviously only won one, and that's only 25% success rate. But having said that, it only will take one more trade. It will take one more trade next week, and I'll be almost break even again. So I'll continue trying this strategy. Obviously, I'll do a few little tinkerings here and there to try and assess it. But at the end of the day, did I do everything right? Did I stick to the system? Yes, I did. If I'd let my emotions get involved and tried to change the stops or tried to take the trades early, I might have made more winning trades, and it might have worked out this particular time, but in future it might not work out. If you're going to trade a mechanical system, you can't let your emotions get involved, and you've got to trust the system, and in the long run, hopefully it will pay off. As I say, I'm only literally just one trade away from almost break even, so it's not the end of the world. Obviously I was frustrated at the time on Friday, and that's why today I went out for a run. I'm known as the running trader because I absolutely love running. and it's a really good thing to do for stress relief, especially when trading like this can get you really uptight and frustrated about, especially when you only miss a winning trade just by that point too. It can get you really wound up. But you go out for a run and you just forget all about that, and that's my other passion, is running. So yeah, I just went for a run, and obviously, by talking about what's happening on this particular trades during this week, by explaining it to you, then it makes me look at it more analytically, and knowing that I did do the right thing. But it's just just one of those weeks, and hopefully next week will be a better week, and we'll wait and see it anyway. Okay then, cheers.